Kirk Hartman, Chief Investment Officer at Wells Capital, where he helps oversee $200 billion worth of assets, joins us once again from Los Angeles. Kirk, good to talk once again. What about this news coming from the global community saying they are going to provide liquidity, especially dollar funding, for those that need it?
Well, I think it's a very good development. I've said all along that there needs to be more coordinated action. I think the markets are taking this very positively. My view about Europe, it's going to continue to limp along. I think policymakers are going to continue to do stopgap measures and, so to speak, kick the can down the road. So I think it's just going to take time.
Okay, what about the banking crisis statement? You know, PIMCO, as we've been talking about all week long, El Arian saying we're headed towards a banking crisis, not just a sovereign debt crisis, with more coordinated action. Do you think that theory has been put out the window?
I don't think we're going to have a banking crisis, but I think we're going to have more turmoil. Clearly, there are issues, but I think that over time it will work itself out. Actually, a lot of the corporations and the consumers in Europe are actually doing pretty well. As we all know, the issue is the sovereign debt. But I think that if policymakers work together like they did today, I think we'll buy ourselves some time, and I think it will work out.
Okay, buy ourselves some time, but eventually Greece or someone's going to have to default, right?
Well, I think you're going to eventually have to face the issue, but like anything else, I think people are going to avoid, the precipice. I don't think it's in the German interest to do that. I think that they are benefiting from export growth, and I think a country like that, will think long and hard before it will completely repudiate Europe. So again, I think it will work out.
Okay, well, that sounds pretty optimistic, Kurt. Let's move on to the U.S. Are you optimistic on the U.S. economy? We just got the jobless claims rising more than forecast last week, but then we also had CPI coming up close to the Fed's target, and industrial production. Which of these numbers were you more or less focusing in on?
Well, confidence was shattered, and the problem with when confidence is shattered, it takes time to recover. Corporate earnings are very strong. There's a lot less leverage in the system. Corporations, like consumers, are flush with cash. So the question is, when will the political uncertainty and the structural uncertainty and the rules of the road resolve themselves? Once consumers and corporations know what the rules of the road are going to be, I expect that positive times will return. You have to remember, in the U.S., export growth has grown 10% year over year. So while there are clearly a lot of problems in the U.S. unemployment, there are also a lot of very positive signs.
Okay, well, you mentioned confidence is a big issue. How much confidence do you think was shaken from this UBS story of a $2 billion trading loss in unauthorized trades?
I don't think that's a big issue. We've seen that before. I think it's isolated to one institution. Obviously, none of us like to see these things go on, but it's kind of the human condition. There will always be a rogue trader, and hopefully you can prevent it. But I don't think, in terms of the markets, I don't think the market really had much impact at all.
Okay. Well, Kirk, you're saying over the next couple of years you can construct a portfolio that'll give you 7% returns. How do you do that in this environment? What do you go after?
Well, there's dividend yield. Sure. Dividend yields are very strong. High-yield portfolios, which behave a lot like equities, are yielding 7%. I think you could sprinkle in some very good technology companies. We own companies like Apple and IBM. Apple is almost back at 400, and IBM is, something like 170 again. I think they're both up 21%. So I think that, growth in great companies will continue. I think you ought to look at things like the convertible market, which actually can do well even if interest rates rise. So I think you can put together a nice portfolio of dividend stocks, high-quality technology stocks like the ones that I talked about and we own. And also, if you look at emerging markets, there are a number of great emerging market companies with dividend yields at 4%. So I think if you can go in here and buy at the bottom, you can have a portfolio that will earn 7 to 10% over the next couple of years, which I think in a lower return environment is pretty good.
Yeah, it does sound pretty good. Kirk, thank you for your time. Good to talk to you as always.